fortunate to have four outstanding executives participating in this panel this afternoon. Our first presenter will be the Executive Director of the California State Board of Equalization, my boss, Mrs. Cynthia Bridges. Our second presenter this afternoon is the Executive Officer of the Franchise Tax Board, who used to work for the Board of Equalization, so we'll give credit for that, Mrs. Selby Stanislaus. Our third presenter is the Division Chief of the Collections Division of the Employment Development Department, Mrs. Renee Gibson. And our last speaker for the panel is Mrs. Lisa Hamilton. She's the Stakeholder Liaison for the Small Business Self-Employed Division of the Internal Revenue Service. So at this time, I will turn the time over to Mrs. Bridges to start with the presentation.
I want to begin by thanking all of the sponsors and the participants of this Connecting Women to Power Business Conference. This is an amazing opportunity that brings women, state officials, and experts together on such issues as tax compliance, leveraging technology, accessing capital, developing business plans, and marketing. I'm also honored to participate on this panel with Ms. Stanislaus, Ms. Hamilton, and of course Ms. Gibson, I'm sorry. We are here today to help you navigate and indeed take advantage of the many incentives available under the law to help make your businesses competitive and successful. As was briefly stated, I do serve as the Executive Director of the California State Board of Equalization. I am appointed by the board members, comprised of 4 elected members and the elected state controller, currently John Chung. 2 of our 4 elected board members are women, Vice Chair Michelle Steele, representing much of Southern California, including Orange and San Diego counties, and Betty Yee, representing the Bay Area and much of Northern California. Of course, they are joined by Chairman Jerome Horton, representing much of Los Angeles County, and George Brunner, representing Santa Clarita, north through the Central and Sacramento valleys into Northern California. The Board of Equalization's responsibilities include administering state sales, use and excise tax and fee laws, collecting and distributing money to support state and local government programs and services, promoting uniform local property tax practices, setting property tax values for assessed properties, and serving as an appellate body for income and corporate franchise tax disputes. The board maintains an open business attitude at every level of the organization, and as such, we want to be the go-to agency for advice and counsel as it relates to sales, use, and excise taxes and fees. If you visit our website at www.boe.ca.gov, you'll find a treasure trove of useful information. You can search our seminar schedule and you'll get access to valuable educational tools such as virtual seminars, tutorials on basic sales and use tax, seminars for nonprofit organizations, a schedule of our small business fairs, and free classes on how to e-file. The BOE also offers instructor-led classes in how to prepare a sales and use tax return, how to report exempt sales, how to use a resale certificate, how to determine what is taxable and non-taxable labor, and how to maintain adequate records. Our small business tax forums include presentations by several tax agencies to help small businesses start, grow, and succeed. You'll have an opportunity to talk to experts from the Board of Equalization, Internal Revenue Service, U.S. Small Business Administration, Franchise Tax Board, Employment Development Department, and Social Security Administration. So as an entrepreneur, you should know that you are just one click away from all of the tools and systems to succeed in your business. With that being said, let me offer some useful tips before I go into my presentation on tax exemptions. As a business owner, you should know your rights as a taxpayer. We do have a taxpayer advocate on staff. Take advantage of eReg, which is an online connection to the BOE regarding permits, licenses, and your account. In the case of an audit, we encourage you to keep good records, such as sales invoices, purchase invoices, resale of purchases, information, bills, receipts, cash register tapes, and of course sales contracts if applicable. Maintaining these records is the most reliable way to prove that you paid or you charged the correct tax or fee, and you're required to keep these records for 4 years. Most importantly, I encourage you to ask questions. Call the BOE, visit our website, read our publications. But even the most experienced business person often encounters bumps in the road that can lead to difficulty. So I'd like to share with you 5 bumps in the road to look out for. First, purchases that you make out of state for your own use in California are subject to use tax. Second, make sure that the taxable sales reflected in your books and records reconcile to the taxable sales that are reported on the returns filed with the BOE. Third, make sure you have a resale certificate on file that covers every non-taxable sale for resale you make. And if in doubt, you can call the BOE to verify the seller's permit number stated on the resale certificate. Our toll-free resale verification number is 1-888-225-5263. 1-888-225-5263. Fourth, be careful not to hit the ring-up key for non-taxable sales that should be taxed. And fifth, always report use tax on any resale inventory that you use yourself. Although all of these rules and regulations sound daunting, and indeed compliance can be complicated, remember that hundreds of thousands of businesses comply successfully and prosper. The bottom line is that we are here to help, and we want you and your business to succeed. So if you have questions, ask for our educational consultation program. There's no charge for it, and it's not an audit. Finally, you may wish to get written advice about whether a particular activity or transaction is subject to tax. Under certain conditions, reliance upon this written advice from the BOE can relieve you from any future liability. So now I'll take a moment to just talk a little bit about some of those tax exemptions that you're so eagerly awaiting. Recently, sales and use tax exemptions have been adopted to spur business growth in these major areas: manufacturing and green technology and solar. Manufacturing. You have probably heard that California is losing its manufacturing companies to other states like Texas. But last year, the governor signed new legislation that is going into effect on July 1, which is 10 days from now, to allow companies to purchase or lease at a reduced tax rate from July 2014 to June 2022. This partial exemption will apply to manufacturing and research and development equipment. There will be a partial exemption around 4.19% through December 31st, 2016, and around a 3.94% partial exemption through June 2022. So how do you qualify? You have to be a qualified person, purchase qualified tangible personal property, and use the property for the uses allowed. Now, neither the seller nor the buyer of the equipment need apply to the Board of Equalization to obtain the partial exemption. However, the board developed sample exemption certificates that can be used to document the exemption. The certificates are available on our website. The seller of the property must obtain from the buyer a timely exemption certificate to support the partially exempted sale of the equipment. A qualified buyer must in turn provide the seller with a timely partial exemption certificate to obtain the reduced tax rate on their purchase. So who is a qualified person? It's a person who is primarily engaged in manufacturing or in research and development in the field of biotechnology or in the physical, engineering, and life sciences. We use the North American Industry Classification System, commonly referred to as NAICS codes, to determine the persons that are included in the qualifying industries. And the primary activity must be at least 50% in the form of manufacturing or research and development in biotechnology or research and development in the physical, engineering, and life sciences. So what qualified tangible personal property may be exempt from sales tax? Generally speaking, it's machinery and equipment used to operate or maintain the machinery, pollution control technology, and special purpose buildings and foundations. Qualified use also includes manufacturing, processing, refining, or recycling processes, maintaining, repairing, measuring, or testing qualified property, use of qualified property by a construction contractor. As it relates to the green manufacturing exclusions, this is an exclusion from 100% of the sales and use tax. It is available to companies that design, manufacture, produce, or assemble advanced transportation technologies or alternative source products, components, or systems. This program is fully administered by the California Alternative Energy and Advanced Transportation Financing Authority. The website of the California State Treasurer's Office contains links to this program and explains or provides information on how to qualify. There are also property tax exclusions which allow you to exclude the value of certain properties from your property taxes. The business inventory exemption includes 100% of the value of property held in the ordinary course of business. Examples include merchandise held for sale or lease, animals used for the production of food or fiber, incidental supplies that are passed on to customers. Finally, there are certain types of property that are exempt from tax under the California Constitution, and these include seismic retrofitting, fire sprinklers, disabled access, active solar energy systems as well. Additional information on these exclusions may be found on our website. As always, detailed descriptions of these exemptions and exclusions are available on the BOE website. Just search publications and you will be taken to written information that can be downloaded and printed. I know that I've thrown a lot of information to you this afternoon, but if I can leave you with any final advice, it is to always ask questions and to always consider the Board of Equalization and our resources as one of your business partners. Our toll-free tax tip line is 1-800-400-7115. Again, that's 1-800-400-7115. My staff and I would be very happy to address your questions or speak to you personally about any particular credits, exemptions, or other tax issues that you may have following this session, or if there's another break during that break. Thank you for your gracious attention and attendance.
Thank you, Cynthia. Well, everyone, can you hear me? Yes, okay. So good afternoon. So I've had the pleasure of coming here for the last 5 years. 5 years ago, Chairman Horton and the Honorable Yvonne Horton approached me and asked me to come and speak to all of you about tax issues. And it's been really a blessing to be able to come and share our knowledge with you. But what has been even a greater blessing is after the session, I've had many people calling me. And even today, 5 years later, I have people who were part of the first audience calling me, calling my office on tax resolution, on tax issues. So please, if you have any questions on income tax, franchise tax, corporation tax, please contact my office. So in speaking to some of you today, you asked me, what it takes to run a successful business. So let me share some 4 tips with you on tips that I follow to run a successful franchise tax board. In real estate, we say it's location, location, location. Okay? But in your business, it is education, education, education. Find your passion and then try to make a business or a living out of it. That's number 1. So to do that, you need to be educated on every aspect, and here we are here to educate you on the tax code. Moving on to number 2.
is surround yourself with the best, whether it's your employees, whether it's your managers, or if you're just starting on your business, surround yourself with a great support group, and then you will be successful. Third, have faith in your brand, in your product. Now at Franchise Tax Board, our brand is, we want you to pay the right amount, not the most amount, but the right amount of tax, no more, no less. And then we are bound, our employees are bound to exercise the greatest customer service skills in dealing with you. And finally, the fourth part of it is you will have failure. I mean, we have failures all the time with Franchise Tax Board. But Mahatma Gandhi, someone I really admire, coming from Sri Lanka, he said, you die every day, and the next day you are reborn. So it doesn't matter if there are failures in your life. It does not matter if there are setbacks in your life. Just move on with your dream. So moving on with your dream, and now you have your dream, and the next question that you will ask me is, what type of entity should I form? Should it be a sole proprietor? Should it be a partnership? Should it be a S corporation? Should it be a C corporation? Should it be an LLC? Now, I can't give you advice, that's tax advice. But what I can say is it has to, contact your accountant, contact the CPA or your enrolled agent, and he or she will be able to guide you as to what the best entity is for your business. But what I can say is it's all based on your budget. You're just starting off your small business, so maybe a sole proprietor might work best, or maybe a partnership might work best because you don't have any cost associated with it except maybe your business license. But if you're looking at limited liability, you're concerned about liability, then I would suggest you move on to LLCs or a S corporation or a C corporation. But we do have 2 videos on our website that addresses it a bit more in detail. So take a look at our website, look at the videos, and then you can go to the next step in deciding whether you want to move forward as a sole proprietor partnership, or you want to take it a bit further as LLC, S corporation, C corporation. Okay? All right. So now moving on to tax incentives, and that's why we're here today. So the first one is film credit. This is Los Angeles. We get a lot of questions about film credit. So qualified taxpayers must first apply to the California Film Commission, which is called the CPC, and they issue these film credits. So we have more information on our website. I won't bore you with all the elements or all the details of this credit, but it's a very, very popular credit. It's a first come, first serve basis. And then we allow 100 million every year, and 10 million is set aside to independent films. So once again, all the elements, all the requirements are on our website, so please visit our website. So the next tax incentive is fresh fruits and vegetables credit. To qualify for this credit, the taxpayer must be engaged in the business of planting the crop, managing the crop, and harvesting the crop from land. And if this is done, and then 10% of it that's donated to the California Food Bank is subject to this credit. So moving on to the third credit, which is also a very, very popular credit, which is called the New Employment Credit, which has now replaced the Enterprise Zone program. And the good news is a lot of areas in Los Angeles, Riverside, and Orange County is part of this program. So this credit is once again for qualified taxpayers that hire a qualified full-time employee and pays the employee for work performed in an area known as the designated geographical area. So once again, go to our website. All the elements, all the requirements are on our website, and I hope you can take advantage of it when you start your business. So the next credit is research credit. And this is applicable if you are starting your business or if it's an existing business. But one thing I would say is keep good records. We do follow the federal determination for research credits, but where the feds differ from California is based on the quantum of evidence that you come forward with. So make sure you have very, very good records for if you're taking advantage of this research credit. So these are in a nutshell some of the credits that we offer in California. So let me talk to you very briefly about tax help. Okay. you have any issues with franchise tax board, we want you to use our website. We have revamped our website. The look and feel of our website is, I would say, user-friendly. But we are even changing the contents again because what we've noticed is most of you use smartphones and tablets to view our website. So we're changing the verbiage to help you, for you all to be more accessible to our website. So take advantage of our website. We have live chat. You can chat with us online. Our line agents are available, 8 to 5, 8 to 6 during fire season to talk to you about your particular problems. We also have a 1-800 toll-free number. If you're a practitioner, you can take advantage of a different set of numbers, but I don't know whether we have any practitioners here. So our toll-free number is 1-800-852-5711. You can correspond with us, email, we're on Facebook, we're on Twitter. So take advantage of all the services we offer at FTV. All right? So I will, if you have any questions, maybe all done with the presentation, I'll be happy to talk to you now or talk to you offline. So once again, my name is Selvi Stanislaus, and if you want to contact me, you may. It's selvi.stanislaus@ftv.ca.gov. So good luck with all your businesses.
So again, my name is Renee Gibson, and I'm the Chief of the Collection Division for the Employment Development Department. I've been in the department probably now for about 15 months. Prior to that, I spent 25 years working with Franchise Tax Board, and had the wonderful pleasure of working with Selvi, and she's absolutely everything that she says. She will call you back. You can call her, give her a call, see her after the conference, and it's been wonderful. So here I'd like to just share with you how EDD, we're all here speaking about California and how we can really help. And I think for many of us, this is probably the best part of our job, is when we can truly connect with you. One of the best tips that I can give you, and before you even start there, getting started, one of the best tips I can say is that, get connected with people. In the spirit of the conference and what you've heard today, get connected. Become educated about everything about your business. Become educated about the requirements for your business, and be educated about the services that are offered to you at no fee in the state of California. So we definitely want to start there. When you think about ED, think about us as an organization. We're probably one of the larger state agencies. We have hundreds of offices all around the state. So I encourage you, for different services, we provide millions to Californians all the time. I'm going to share with you some of those no-fee services that you can, no-fee services that are at your fingertips, as well as some things online that you should really, really be well versed about. So first of all, we'll start with just getting started. Let's start there. Let's talk about some free seminars, and let's talk about you being really equipped in your business. So I want to share with you, as Cynthia and both Selvi mentioned, is that the internet, our web page, is a great place to be. Get online. There's great information on there. You'll find information about tutorials and videos that you can have that are at no cost to you. Some of them are online. Some of them have classroom style all over the state. Make sure that you tap into that. You'll get lots of information on what it means to be an employer, the requirements as being an employer. You'll also find out information about your reporting requirements. But get online and get educated. Really get connected with people. It's very important that you do that. I also want to share with you just a couple of few business tips for you for success. One of the things that I always share with people, one of the first things, know your resources. Know your resources. There's a lot of information out there, and you just have to tap in. There's the beautiful thing that we have at the internet, we have at our fingertips. You can search on just about anything. You can search on tax incentives, you can search on tax credits, you can search on small business loans, but do that. You have to become a student of your craft. It is through that kind of education and being very connected that it makes you good at what you do. It makes you very much aware of the resources that are available to you. So from an EDD standpoint, one of the things I want to also talk about is that when we talk about really getting connected, and I want you to really plug in today, one of the things that I learned in one of the conference breakout sessions is that it's not enough just to share information. Make it tactical. So today, if there are 3 things that you walk away doing, make one of them getting online, seeing if there's a tutorial, whether it be for any of the agencies, and signing up for that, or viewing that. Make that your priority. Get in the know about that. Secondly, what I would ask you to do is once you've done that, go in and make sure that you type in something that you didn't know about, whether it be a tax incentive or a tax credit. Type that in. Get information about that. Share that information. But one of the things that you definitely want to do is know your resources. For EDD, we have what's called the employer requirements. It's a DE 44. It's online. Make that your Bible. Look at it. Read it. Understand everything that you can about becoming an employer in small business. Of course, we always talk about time is money, right? So make sure that you use e-services. Use e-services for everything. Use e-services to file, use e-services to report, use e-services to update you, to look at your reports, to make payments. Use your e-services. It saves a lot of time. Another one that I want to share with you is that look at Pal Jobs. That's another one that you can walk away with. So Pal Jobs is online and it connects those job seekers to employers. So whether you're an employer looking for a certain skill set, get on there and see how you can find the talent that you need in your business. And if you're a job seeker, you can use that as well too. Also too, this is another tactical one that you can walk away with, is participate or get involved in an advisory group. You have advisory groups, depending on whatever industry you're a part of. Walk away with looking for one that is right along your industry. And advisory groups work directly with the California agencies. They talk about your concerns, they share your concerns, we brainstorm, we work very closely because we realize that it's about economic vitality. You play a critical role in that. And so begin to look up. That's another way that you connect and you network. So make sure that you do that as well too. I'm going to skip over the slide for e-services just for a time's sake, but I just wanted to make sure that I shared some of those tips. The next couple of slides I'm going to talk about is not necessarily what's new with EED, because a lot of these tax credits may not even land within our shop. They may land with FTB, they may land with BOE, they may land with IRS. But my hope is that you'll be able to take this presentation and you'll be able to save it as a nugget of information that will be at your fingertips that you can look further into. So what's new for 2014? Covered by there's what's called SHOP. And if you go to the website, and I'm sorry if I'm still in Lisa's thunder, but she may talk a little bit about that, but it's really going to take you to IRS. It's going to talk a little bit about the Affordable Care Act and health options that small businesses have. Look at that. Again, know your resources, know what's available to you, and become very equipped with those things. Talk a little bit about tax credits and incentives. So we have what's called the Work Opportunity Tax Credit, and actually, even though we have the forms at EDD, the credit is taken with the Franchise Tax Board, and just in a nutshell, what that is it's in order to promote, it allows you to hire individuals who qualify as a member of a target group, and it gives you a credit for that. So again, if the target group, if you go online, probably Franchise Tax Board or EDD's website, you're going to find what makes that target group. It could be families with need assistance, it could be veterans who have disabled, but know that if you were to hire these individuals, that you can get a tax credit for that. Another one that you may not know about is the Empowerment Zone and Renewal Community Tax Incentive. Don't have a lot of information on that, but it talks about if there is certain populations or certain targeted areas, you can get a tax credit for that as well too. There's the Disabled Access Credit, which if you want to make your business accessible to individuals who are disabled, there's a tax credit for that as well too. So again, it's about getting in the know, it's about being educated, what's available to you, and make sure that you use the tools that are available to you. There's so many things that we could share with you today, but in the spirit of time, I would say that go to the tutorials, go to the seminars. There's seminars all over the state where you can really go in and drill down to the specific one that best meets your needs. And then the last slide that I want to share with you is I want you to walk away with some resources for business owners. And I'm hoping that you'll get a copy of this presentation so that you can go in. And I encourage you to look at the websites and look at the web pages and sign up for the seminars and the video tutorials. And again, get a part, become connected with an advisory group. It is one of the best things that you will find. And you will find other business owners who are in your industry who can help you navigate, particularly if you're new in your ownership as a small business. Okay? So thank you very much. And again, if you do have any questions, we're happy to answer afterwards. I have business cards. Also, too, outside on the table, I have lots of pamphlets that I brought in terms of the ABCs of getting started. And we also have additional information on tax incentives and credits. I encourage you to please take one and run out. Okay? Thank you very much.
Hi everyone, my name is Lisa Hamilton, and I'm sure everyone can hear me because I'm very boisterous. One of the things that I want you to take away today is the IRS and the EDD are very good partners. It's good that Renee and I are sitting here today. We offer payroll tax workshops. We offer small business tax workshops as well. And what that is, it's like you spending 30 minutes with me asking me what is and what is not deductible. What's a tax deduction? Is this something that would red flag my tax return? And that's one of the things that we like you to do, is to know what's going to go on your tax return, because it will help you stay compliant. And we're compliance agencies. There are credits that I'm going to talk about, but I do want I want your business to grow. This is such a brave thing. I look at you as heroes, because you'll probably be hiring my kids, or so I do want your businesses to grow. One of the things that we also teach is what's the difference between an independent contractor and an employee. That's so important for you to know, especially as your business grows, because you may have someone that works with you, you issue them a 1099, but maybe to keep them, you want to offer them an incentive, like a benefit or health insurance. And the EDD has the form online, and you just kind of look through the steps and you answer kind of yes or no, and you make that determination. So let's talk a little bit about IRS tax credits. The difference between a tax deduction and a credit is the tax deduction is a reduction in your taxable income, okay? But a credit is a dollar for dollar reduction in tax. So it makes quite a bit of a difference. One of the big incentives right now is hybrid users. And I remember a few years back we were like, oh, that Prius is so ugly. But now the incentive is there to drive green, and there's a Cadillac Escalade that has a hybrid, and a lot of Fords and all of these different cars, soccer mom vans. And if you use that vehicle in your business, you're entitled to a tax credit, and it's up to like $7,500, depending on what you spent on the vehicle and when you place it in service. And another thing that they look at is the battery, the use of the battery life, and the capacity of fuel to battery in that vehicle. And so that's a very good tax credit for small business owners such as yourselves. One of the things that has been the big push these last few years is the small business tax credit for employers who have employees who they're offering health insurance for it, okay? So this tax credit went into effect in 2014, but it doesn't technically impact the filing until 2015. So remember, if you're an employer, even if you have one employee or 49 employees, you have to have less than 50 employees. You have to pay an average annual wages of less than $50,000. And if you pay half of the cost of single coverage, you may be eligible for this tax credit. And there's tons of resources at healthcare.gov. And this varies from state to state, because here in California, they have specific guidelines and a lot of information that's available from the state. And it's very easy. You kind of ask, you give them some information, and they'll tell you exactly what you can and cannot do. And one good thing about that credit is the maximum credit will increase to 50% of the premiums paid for small business employers. And as long as you pay the premiums that your employees incur, and they're enrolled in qualifying plans. And that credit is available to eligible employers for 2 consecutive tax years. I'd like you to visit irs.gov, and when you use our search engine, just you could always just connect with Affordable Care Credit. Okay. Another big deduction that business owners get is depreciation. If you have a tangible asset, because I was talking to someone who has a massage company. So although her hands, she can't depreciate them, but the tables that she uses, the towels, the washing machines, these things are depreciable assets, okay? And the depreciation deduction allows you to recover the cost of certain business assets. Buildings, not the land, the building, any machinery, vehicles, equipment that you put in there. As long as you own that business asset, you must use that asset in your business, and the asset must have a useful life of 1 year. So you can't buy and sell an asset in the same year and take depreciation. That's not allowed. But if you have an asset, and let's say it has a 3-year useful life, you deduct a third of that if it's 100% business use. If you use it for 50% business and 50% personal, you're still going to be allowed to have that 50% on your Schedule C or your individual income tax return. There's a publication online, and a hard publication if you ever get to walk into an IRS office. It's publication 946, and it tells you what your business asset is, it tells you what the useful life is, and it tells you what the percentage that you're allowed to deduct per year. So that's a very good deduction for business owners as well. If you do business in your home, you may qualify for a residential renewable energy credit, and that would be something like installing a solar water heater or geothermal heat pumps, and you can qualify for up to 30% credit for that asset, as long as it was placed in service after 2008, and some of these credits will expire in 2016. And make sure the property is certified, and you can look for like symbols like SRCC, and you can claim that credit of up to 30% qualified expenses as long as that system serves in your dwelling, like in your residence. And it's not a refundable credit, but the excess could be carried over until, I believe, 2016. And on that, you can look on Form 5695, and it gives you the details of how to take that residential renewable energy tax credit. One of the other things that I would really like you to take away here today is I want you to use irs.gov. We have tons of applications as well. We have IRS to go. You can download it to your iPhone. And sometimes if you're out looking at something or shopping and you want to see if that's deductible, you can always hit us up, like my son says, at irs.gov, and keep that information for your business. Some businesses are in the search engine, and it talks specifically about your industry or your business, and it tells you what is and is not deductible. It's a very good tool to use because we want you to keep good records so you stay compliant. No one knows your business better than you. You realize how passionate you are, and we want to make sure that you stay compliant and your business will grow. Okay? And if anyone has any questions for me, I'm at lisa.a.hamilton@irs.gov. Okay? Thank you.
Please join me in thanking these wonderful ladies for sharing their words of advice with you this afternoon. And if you have questions, I want you to start passing the cards to your right, and I'll have the two timers collect them. So please join me in a round of applause for our speakers. First question, if an employee chooses to cash out health insurance premiums, is that taxable? So that sounds like FTD and IRS. IRS? If an employee chooses to cash out health insurance premiums, is that taxable?
What you need to do is, if you have a payroll company that does your payroll taxes, on the W-4 and on the W-2, there's going to be a box for that. And so that's what I would advise you to do, is to speak to your payroll tax company, and they'll be able to do that, because that's a calculation, and you're definitely gonna need to, if it's income to someone, it's an expense to someone, so you definitely need to speak to your tax provider, or payroll tax provider for that.
This person would like more information to be available for sole proprietors to address the need to pay into Social Security. So, we're maybe on the website where they can find a little bit more information.
Okay, are you asking to make estimated tax payments?
They're looking where they can find information available for sole proprietors to address the need to pay into FICA Social Security.
Okay, yeah, if you have a professional who prepares your tax returns, you may want to be able to make estimated tax payments. And again, that's going to depend on your income. But what you can do is to set up quarterly tax payments, and it'll give you a credit at the end of the year that you would offset any of your taxable income. So I hope I addressed the question. And if I didn't, please send me an email at lisa.a.hamilton@irs.gov, and I can help you with that.
What I will do also, if you provided your contact information, email address, or a phone number, I will make sure that goes to the speaker as well. That way you can reach out to them. This question is, I run a service-based company that has a small percentage of revenue, sells skincare products. I have a reseller's license. What do I need to do to comply with the law when it comes to reporting sales tax and paying sales tax? Skincare products are taxable personal property, so what you need to do is make sure that you keep a record of the purchases of the products that you're going to be reselling. You have to make sure that you charge the tax when you make the sale, because if you choose not to charge the sales tax, you will still be liable for the sales tax. The sales tax is due upon the retail sale. You are allowed to reimburse yourself for that sales tax, and then you will report that either on a quarterly or a yearly basis to the Board of Equalization on your sales tax return. So we will ask you to report based on the sales price of the merchandise. You should report your gross sales, so you could report, it doesn't say what type of service business, but your entire gross sales, you would take a deduction for all the non-taxable, so the service portion of it, you would take a deduction on your sales tax return, so your taxable amount would only be based on the sales of the tangible personal property. And if you need any more specifics on that, I would be happy to give you any details afterwards. I also have one additional person that can help us for the Board of Equalization that's here with me. So if you need additional help on that, we'll be happy to help you afterwards. Let's see, one more question here. There are many forms of business ownership. Which one involves the least amount of paperwork from a tax perspective? So that could be probably most of you. From the franchise tax perspective?
So let me tell you, any form of business entity that you choose, whether it's sole proprietor, partnership, LLC, whatever you choose, you need to keep very good records. That's a given. Because you may deduct your business expenses, your mileage, and how do we really know? So keep good records, keep logs. So any form of ownership you embark on, I would say number one, keep good records. Number two is what's the least complicated form of ownership? I would say sole proprietor and maybe partnership would be least complicated for your end. But then the other part of it is limited liability. You need to be concerned about that. So what that means in a nutshell is that your personal assets will also be liable if in the event you are sued, your business tanks, something bad happens to your business, your personal assets also will be pulled in to settle those debts. So when you shield yourself with an LLC or a corporation, then they don't pierce what they call the corporate veil. They keep it separate. As long as you maintain separate books for your entity and a separate set of books for your personal things. So So I don't know, Lisa, you want to add on to that? But bottom line is, whatever form it is, you need to keep good records, but I would say sole proprietor and partnership would be an easier way. But that, again, you need good records.
I agree. I believe if your file, the most simplistic form is going to be a 1040 with the Schedule C. That's a sole proprietor. If you have a partnership, then you know that you're going to have the LLC flows down to your Schedule C. So it kind of comes out the same. But by far, that's the most simplistic way to file. And again, I recommend everyone to look at a Schedule C because it's very simple. It just has what did I make and all of these lines of deductible expenses. And it's just so simple to follow. Car and truck, depreciation, we had a secretary or any type of deductions like that. It's really simple. Once you look at that Schedule C, you'll say, oh, I did that. I'm a baker. I bought an oven and I paid for flour and sugar. And it's a very simplistic form.
Any tips from the development department? In regards to paperwork? As far as the Board of Equalization, there isn't really a difference that is dictated by the type of entity that you operate. It's based on the type of business that you're running. So regardless whether you're a sole proprietor or a corporation, the amount of paperwork that is going to be necessary for you to protect yourself will be dictated by what you're doing. The type of records that you're maintaining for your business, regardless of the type of legal entity that you're operating as. The next question, please discuss some of the risks involved with accepting a resale certificate from Mexican businesses. Is there a way to verify their card resale certificate online? If a Mexican merchant is coming into California and taking possession of that tangible personal property here in California, even if they issue you a resale certificate saying that they intend to resell it in Mexico, because they took possession, a taxable transaction has taken place in California and they have to pay the sales tax. There's no way to exempt that. However, if that individual is willing to make arrangements for you to ship that merchandise out of the country, then that becomes exempt from sales tax. And we would advise you to make sure that you maintain shipping documentation to prove that the merchandise was shipped out of the country. The same thing would apply if you're shipping that merchandise out of state. If you're sending something out of state, it is not subject to sales tax. However, you need to maintain that shipping documentation, which is your proof that it's a sale in interstate commerce and it's no longer subject to tax. So if somebody comes here, whether it's Nevada, whether it's Mexico, and they want to walk away from the store with that tangible personal property, sales tax is due. It's not exempt at that point. You can verify a resale certificate from a California company on our website. If you log into our website, or you can call in, I believe Mrs. Bridges shared the 800 or 888 number, and if you contact us either on the website or by phone, then we will be happy to confirm the validity of the resale number for California-based businesses. Those were the questions that were turned in. We thank you so much for joining us this afternoon and continue to have a wonderful day. Thank you.